we're only scaling further higher and higher. ICICI Bank, of course, has been the leader today. Another brokerage upgrade coming in, although I think it's completely meaningless, the kind of over-ownership the market has in ICICI Bank. And just about every fresh call is on ICICI Bank. In fact, the entire corporate banking story. So another 3% dash is what you're seeing on ICICI Bank futures right now. PC Jewelers, Reliance Capital, Motherson Sumi, DCB Bank. These are a couple of buzzers in trade. From within the Nifty, outside of ICICI Bank, you're also seeing Vedanta, you're seeing Asian Paints, Axis, Reliance ahead of its numbers, and DRL after its Bachupalli unit got an EIR. That's got a big relief, and that also is seeing a significant amount of leg up as we speak. But we'll focus on infrastructure. Brokers are pushing infra to be the best play ahead of elections, assuming that it's the same leadership that does take charge on May 23rd. Let's take it across to Pankaj, find out why exactly is the market so interested in infrastructure, Pankaj?
Right, so Aisha, I'll just give you some perspective. Back in 2014 to 2019, infrastructure has done well in terms of progress of what were the hurdles earlier and now what the situation is. And going into that, most of the brokers, for example, Phillip Capital is saying that markets are offering an excellent opportunity to build an infrastructure portfolio. Infra stocks can deliver outperformance over the next 12 months. They see superior macro environment and infra valuations favor, and that's why advising their clients to go ahead and buy. Now, a couple of reasons they are citing. Infrastructure balance sheets are much better, whether you talk about leverage, whether you talk about working capital cycle, whether you talk about their overall interest service capability. Valuations are not yet as expensive as they were. They have taken the last 10 years mean and said that, IRB Infra, Ashoka Buildcon, NCC, all are trading slightly lower or in and around the mean valuations. When you look at the order book to bill ratio, this is a ratio which says that what is the sort of visibility that the company has. They are quite decent and provides at least a visibility over the next 2 years and plus for most of the listed players, and that's why their key bet is to build in infra. The current government or a stable government will promote infrastructure, and that's one of the key reasons that they are looking at this. So the three big questions are: will order pipeline for infrastructure rise after election? Last 5 years, a lot of hurdles have been, gone ahead and changed and worked in the favor of the companies, or, made it more easier for those hurdles to not be such a big hurdles. Will execution follow that? And are infrastructure companies, as in the individual entities, much better placed versus the optimism going into 2014?
Go back to that infrastructure discussion once again with Vinayak and with the management of Dilip Buildcon. But, it's a big day if you go public. It's a dream for any entrepreneur or a promoter to see their stock price see that company getting listed, and and analysts and commentators when they start talking about it. Polycab, in terms of a response, got phenomenal response. Phenomenal is the word. And the listing price, we'll just capture it for you on your screen. It'll just happen in 5-10 seconds, I think, when we'll get the listing price. Looking at the pre-open rates, it'll certainly be making money for those who got lucky with the listing, who got the receivable. 640, it's at a 20% premium these days. The issue price, the listing and the issue difference is not even 20 days. It's like about 7-8 days. So, just when we realized that Polycop issue was on, the very next week we realized that it's got listed. So it's a 20% hike. It's a 20% spike rather for Polycop from its issue price, and I'm good to see that the primary market once again is active, thriving, and is also making money. So it's a good listing. I'm sure it will make retail investors and institutional investors very happy. I'm not getting into valuations or the nature of the company. I'm simply reading the price and the momentum here.
No, but this really has been a household name, and I guess that is what explains the kind of subscription numbers that you saw for the IPO. So be it the QIB portion or the HNI category, which was subscribed almost 110 times. So yeah, justifiably so. We were expecting a pop it is, about almost a 20% premium to its issue price. 645 is where Polycab is currently. But back to infrastructure.
Back to infrastructure. We'll talk about Polycab in detail. But Vinayak Chatterjee, good morning. Thank you for joining us. Vinayak, you've always been very descriptive about the reality of the entire infrastructure sector. Now, there is good news and there is bad news in last 6 months. What do you want to start with?
Good news, of course.
So tell us the good news.
See, the good news is that your analysis a little while ago of the order book situation of infra companies is bang on. They have an all-time order book of anywhere between 2.5 to 3x of their annual turnovers. But your analysis was restricted only to building companies or EPC companies. Remember, infrastructure sector is supported by a whole lot of product manufacturers. And you should see their future also is pretty good. In the electrical sector, whether it is cables, transformers, insulators, whether it is pipes like you just talked about polycab, or water supply pipes, or whether it is cement and steel, a whole lot of product economies are aligned to the infrastructure sector over and above the EPC companies. So when you analyze the infra sector, please do it in two segments. One, look at the EPC companies as you did it very well, but also start including what is called the infra product suppliers or infra intermediates. And you will find that their future is equally robust. So why is there good news? The good news is that the starting position at the beginning of a new government is with a robust order book. It is not that people are struggling with lean order books and are waiting for on a parched earth syndrome for the rain to fall, order book rain to fall. You are starting with robust order books. Secondly, the manifestos of the main parties make a very clear thrust towards high expenditure on the infra sector across the sectors which are well known. Roads, highways, railways. Increasingly, the future for people in the water sector is even brighter, because one of the key pillars of the BJP manifesto is by 2024, 100% households in this country will have piped drinking water. Now just imagine what that is do to people making equipment for the water sector, from pipes to pumps to bulk water treatment plants, etc., etc., etc. So the broad news is that the infra thrust is going to be preserved irrespective of what the formation of the new government is. Your starting order book is good, and all of this points correctly to the analysis that your team has done. The bad news. The bad news is that liquidity is still stretched. There is enormous delays we hear in the market of payments from government bodies, and now they are taking the excuse of elections and code of conduct, etc., etc., or transfers from the Consolidated Fund of India to the ministries delayed on account of 31st March year-ending reasons. The popular perception is the government is trying to minimize the fiscal deficit, so it has stopped. I don't know the truth. So liquidity is still a constraint. EPC companies and others are struggling with margins on bank guarantees. The working capital cycle is stretched. So one of the key deliverables to remove the negativism in the coming months would be for the government to open the taps and request all statal entities to say, come on guys, whatever are your pending bills which are all right, please release payments in time. But let me stop here.
Okay, Rohan, let me get you in on the discussion as well, because market participants do believe that infrastructure is one space that's going to do well once we see a stable government return back post-election. Do you think infrastructure can do much better because of superior fundamentals now versus 2014 when this government took over? Because awards are faster, interest rates are lower, and stuck projects are also much lower.
So yes, like you rightly pointed out, infrastructure has done much better in the last 5 years than it was doing before that. And there are multiple reasons, part of which you also touched upon. First, there were a lot of projects which were stuck in the earlier regime. The new government came and made sure that, all those projects started, getting back again on track. After that, they also simplified a lot of the rules which were suffocating the industry in terms of land acquisition, in terms of forest clearance, environment clearances, so they did that. And then thirdly, what they did was they also made sure that they awarded a lot of new projects. So in totality, dispute resolution in terms of taking care of all sorts of issues that were plaguing the industry, and then bringing out more and more projects. So this government has been very proactive. Now going forward, I think whenever there is whatever government comes in, it will be a great thing for infrastructure, because whether it is the BJP-led NDA or the other regional parties, all of them have woken up to the fact that infrastructure is a very key requirement of the country. So if you go to an Andhra Pradesh, or you go to a Telangana, or you go to a UP, the regional parties in those states as well have built a lot of infrastructure and have focused on it. So I think all in all, we should see a bigger and better and brighter future for infrastructure post-elections.
But Rohan, order books of most sector companies stand at more than 3 times the book to sales versus 2014 being much lower. Do you think execution will pick up post-2019?
I think execution is always going to be a differentiating factor between one company to the next, and that's how I think this sector should be viewed on. If you are able to execute on time and with the quality and within the cost, obviously, your P&L and your balance sheet will continue to strengthen. Now, if I talk about in the last 5 years, execution has actually picked up a lot. In these 5 years, the total kilometers of national highways that would be built would be almost 40,000 kilometers. In the previous 10 years, and we built about 25,000 kilometers in totality, versus 40,000 kilometers in these 5 years. So there is a huge uptick in execution, and I think this should continue furthermore.
Vinayak, let me also, bring you back into this, because there's been a lot of, experimentation, a renewed focus now on execution going forward, as we were just talking to Rohan about as well. First, we saw it in BOT, then in hybrid annuity, then back to BOT. Going forward, do you think there's going to be a more focus on execution and profitability rather than just the order book positions?
Well, I am not so sure about your comment on back to BOT, because there hasn't anything come back to BOT. You moved to EPC and hybrid annuity. I am not sure about the intent of any government to suddenly revive PPP in the traditional format of BOT in the near future. So it's largely going to be an EPC driven construction business. While we all are obsessive about roads, please note that the order book from railways on electrification, new tracks and track renewal is almost 4x times what it was 4 years ago. So don't just talk about roads, talk about electricity, and I would bet that from 3 months from now you'll be talking about water. So so electrification, roads, railways and water should all be taken in one basket when you are discussing infra, and I think we should stop obsessing only about roads and highways. It's important and it's done very well, but there are other sectors of the economy that are also now driving very, very hard and are equally attractive. But the answer is yes, it is execution, execution and execution, and it claps with two hands. On the one hand, the government has to see that issues like land acquisition, removal of obstacles, environmental clearances come in time, without which the private sector cannot perform. And private sector has to see that it has adequate working capital, it has mobilized men and materials on site, and it is executing with speed. And some of the very good companies actually finish their projects before the deadline and earn some bonuses. So Indian companies have shown that they are very, very good at execution. So the broad answer to your question is yes, it is execution which will be the challenge, and both sides have to perform. The government has to perform with the deliverables that facilitate quick execution, and the private sector then has to rise to the occasion.
I'm simply going by the narrative on the street, and the narrative on the street is that the private sector capex cycle has not started. The narrative on the street is that look, the private entrepreneur is reluctant to put his or her money to work. With the exception of 2 or 3 large corporate books, nobody is interested in buying, everybody is interested in selling. Why is the narrative very different from what you are telling us?
No, so far as the infrastructure sector is concerned, there is no question of private sector investing. You invest only in BOT type projects where you put balance sheet money. Most of the projects are EPC projects. All you need is working capital, and the private sector is getting the working capital from the banks and NBFCs or wherever they're getting it from now. So far as infra is concerned, where is the question of investing? There are no investable projects. There are only executable projects which require working capital. When you see the narrative on the street, the private sector is not investing. It is not investing in manufacturing and many other sectors. In infra, where are the investable projects? The whole sector is broadly on EPC, and wherever there have been some degree of private sector investment opportunities available, you've got a good response. After all, many people bid for the 6 airports, which of course Adani won all 6. Then when the TOT bid happened a few months ago, Macquarie outshone others with a 9,500 crore bid. So whenever assets are being put up for bidding, which is far and few between, you are seeing an adequate response. But there are so far as infra is concerned, there is no question of private sector not investing, because there are no investable projects. It's all EPC.
Rohan, over 2014 up until now, most companies have significantly repaired their balance sheets, and I think that has been, a big demarcator. They've divested non-core assets, selling land parcels, raising equity capital. As a result, do you think most companies have a much stronger balance sheet at a standalone level and consolidated level as well, compared to 2014 when the government took over, and thereby increasing the prospects of better execution and better, orders getting awarded to them?
Absolutely. If you look at the sector today, all the companies which are doing well, all of them have very good balance sheet. All of them, the debt equity is under control. They have a proven track record of execution in different states, and they seem well poised right now to be able to grab any opportunity that will come across their way. So I think absolutely we are in a far better shape, unlike the earlier cycle where the debt equity had gone completely out of control.
Do you also think that for infrastructure to do well, land acquisition issue continues to be one of the key areas to focus on?
Land acquisition used to be a challenge way back in the earlier regime, but then when the Land Acquisition Act came into force, and now the compensation is very generous. So at least in the last few years, we've seen that farmers or landowners have been very happy to part away with the land. It's just that the cost of acquisition of land has increased many-fold over the last few years. But most people are extremely happy in giving away the land, because you are getting 4 times the circle rate as per the new norms. So most people are very happy, and I think it's just right now the challenge is because the sheer amount of work which has come out is so huge that and the government machinery is not geared up to do as much in the same frame of time, which might cause delays. But the delays are not because that people are unwilling to let go of the land. It is more to do with the quantum of work having increased a lot.
Right. Vinayak, we've talked about the current context. Just to get some kind of a forward outlook from you post-elections in terms of whether you think the industry is better placed today, to sort of gauge whether that pipeline will perhaps flow a bit more smoothly post the elections, even in terms of funding. While interest rates have been low, do you expect IRRs for various projects to improve?
See, once again, one is not expecting a surge of projects where private sector is expected to put in their balance sheet projects like the old days, which are broadly called BOT type projects. The issue is EPC projects. Railways will be EPC, water to start with will be EPC, electricity transmission and large portions of distribution will be EPC, roads will be EPC. So in EPC, you normally talk about margins. You normally don't talk about IRR, which is a return on equity. You talk about margins at which the EPC businesses operate. Right now, EPC businesses go anywhere between, if you're lucky, it will hit about 11-12%, and at a normal it will hit 6 or 7%. So it is in that range that people bid. So it depends on the flow of projects, the appetite of the others. I don't think there will be any great improvement in margins. People will have to live and work within this range of margins. But I think the order inflow will increase substantively, because in the period 2014 to 2019, the action was predominantly roads. And the point I'm repeatedly making is that many analysts are missing the picture that railway orders have actually become a huge force themselves. The transmission towers and the 24/7 electrification has resulted in a very large EPC order book to connect all these villages and associated stuff in the transmission distribution sector. And in the years to come, you're going to see a lot of action on irrigation and pipe water supply. So water is going to be a big stuff. So when you see all these sectors now revving up and adding to the action in roads and highways, the next 5 years seems to be far more, shall we say, active across multi-sectors than even the last 5 years. So I'm actually very hopeful about the order inflow in the next 5 years.
For a minute, if you have to, let's say, wear a hat of a stock investor, and I forced you to wear this hat a couple of years ago, and you said, look, if I have to wear that hat, I would tell one should buy road companies. So if you were to wear a hat now and invest in an infrastructure group or a subsector, which group would you invest in for next 3 years?
You are always asking me to wear this hat at the end of your interview, in every interview, not few years ago. Anyway.
So let me continue the tradition.
Good. No, what I'm saying is, continue to look at very good EPC companies in the road sector. That is a given. But look at companies that are executing railway electrification and track works. That is a hidden gem there. Look at all those companies. Look at companies like KEC, Kalpataru, who have very large chunks in railway works also. Look at increasingly while it still doesn't catch the overall fancy, I can bet that the stocks of companies that are connected with the water sector, who make pipes, pumps, water filtration equipment, taps, valves, all these companies which are suppliers of goods and services to the water sector and water implementation companies, you should do a careful examination of their stock valuations today, and I could bet that they will multiply manyfold in the next 5 years. So water and railway electrification companies are the stocks that I would do some deep analysis myself if I were an investor.
For that. And you've been very forthright in expressing your thoughts as to what is the good and the bad of this sector. It was a very engaging conversation with you and with Rohan. Let's take a break.